Well, thanks so much for tuning in to the trade setup. It's interesting times indeed. Lots to talk about. Very quickly, just a quick snapshot before we get in Peter McGuire to talk about his thoughts on oil because that's the big mover. Remember, in terms of stats, key statistics, if you look at them, the European indices, the Dow Jones or the Nifty, they've shed quite a bit. European stocks logged the worst week since March 2020. That tells you a thing or two. Dow shed about 180 points on Friday and slid for the fourth straight week. For the last 1 month, the Nifty shed about 5.62% or about 9%, 950 odd points, but that may not be done as yet, simply because of the news flow. Now, Vladimir Putin has said that the war will continue. There's no sign of abating post 2 rounds of negotiations until Ukraine meets his demands. The US crude oil topped about $130 a barrel on the possible Western ban of Russian oil, and Beijing has announced a GDP growth goal of 5.5%. So much as everybody in India thought that India was going to be the lone star on growth, and even that is under question mark because of surging crude prices. There is a counter. China looks like it will grow really well in 2022 as well. So lots happening out there. But the most important variable, crude oil and its repercussions. Peter McGuire talks about all things, including investing. But for today, we'll request him to tell us about one thing that he tracks very, very closely, and that's oil and the possible ramifications. Peter, great having you. Good afternoon to you. Thank you for agreeing to talk to us. What do you think of the possibility of these Western sanction on Russian oil and the ramifications that it has for prices?
Well, I think I could talk to probably for about 3 weeks on that, Niraj, and we've only got a matter of seconds. So first off, we've seen what's really taken the market by storm this morning is around about $11 or $12 move to the upside. And that really is the risk premium built into this. And all of a sudden, the whole engagement as far as what's going on with sanctions, Russia and so on is one thing that demonstrates the sensitivity with it all is oil price. And that's what the market's looking at. That's what the market's prepared to pay at the moment. We're looking at about a 127.80 handle for Brent. So when you think of where we were Friday early and where we are today, I think that answers your question. And quite obviously, I think there's further upside from here. No one can put a number at it, but the momentum to the upside is extremely bullish.
Yeah, I mean, that's the question, Peter. So do you reckon, by virtue of your years of study of oil, that there is a possibility that we may even touch 150 or higher? JP Morgan 2 days ago said that it looks like 185 is on the cards.
I look at all the analysts' expectations and forecast, Niraj, and I'm not going to say anything's not achievable because of where we've seen over the last couple of years and what this whole storyline is with less capex. You're looking at tank bottoms. You're looking at the real super backwardation now. You're looking at all of these components worked in, huge demand globally, and the uncertainty when it comes to that Russia crude supply and who's going to fill the breach there. So they're a superpower, Russia, when it comes to commodities, and it's going to be very, very difficult to try and forecast a price. But yeah, maybe you do see a 150. We're only $20 from there now, and it's parabolic. So it's
parabolic. Indeed.
Yeah,
Peter,
that's the situation.
A lot of reports talk about the possible return of the Iranian oil, and that might stem the flow a little bit. And there are counter reports which say that Russia and Iran might be working together as well. You understand geopolitics really well. Tell us about the role that Iranian oil can play for or against this parabolic rally.
Well, it can play a for, we know that, because it'd be more production coming to market. It depends on where those sanctions lie as regards to Russia moving forward. Where a viewpoint is today could be completely changed by Thursday. So there's the story that's hard to quantify how much of that 12 million barrels a day of production that Russia contributes to the global demand picture. Say we consume 100 million barrels a day in round numbers for the viewers, and Russia's producing 12 million. So if they knock it down to 6 million or 3 million, who's going to pick up the the excess capacity. Who's going to supply? Iran might come to the party with a couple of 100,000 barrels, might even produce 750,000. But that's a big hole to fill. And that really creates much turmoil across the oil complex, Niraj. And far smarter minds than I would be looking at that and realizing the opportunities that are presenting themselves. Have a look at that graph. I mean, it's just a dramatic $70 to $130. It's nearly doubled in price in 2.5 months.
Yeah, it's looking slightly difficult and iffy. But Peter, understand we have to let you go, but thank you so much for joining us for this very quick update. Much appreciate your time.
All our best, Niraj, and to everyone, thank you very much. Take care.